Hey everybody, this is John. Welcome to the free video. A lot of hurry up and wait today for the Netflix earnings. You can see that we were up a pretty healthy after hours. The expected move was 11 bucks. It looks like we're up about 12. I anticipate that this will continue to grind higher going forward. For this, we did sell some put credit spreads. And then we did this a little bit different. So you can see that here's the put credit spread for 229. Obviously, if we end up at 143 in the morning, that'll expire worthless. That's good. Also sold 2 standard deviation naked puts. My theory is that, hey, if you can always go 2 standard deviations and get at least 20 cents, and you know how to make adjustments and things like that, you've got 94% chance of success, and then the other 6% of the time you just got to know how to work your way out of it. And then I did something a little different here. This was an iron fly, which is a play for an expected move, but in this case only on the call side only sold 5 calls instead of 10 to leave a potential runner to the upside in case this thing went nuts. Now at a 142 call, if we open up at 144 where we are right now, we'll kind of be right where we are anyway. So, not much there unless we get a little bit higher. So anyway, an interesting way to play Netflix there. In terms of the stock market today, I mean, very choppy. This is to be expected. We've got the ECB, the European Central Bank is going to meet on rates. I think that's 7:30, 7:45 Eastern in the morning, right around there. That can impact the market, so they're kind of quiet. We've got the inauguration on Friday, and it was interesting. Someone in the room today asked, like, "Well, what's the big deal with the inauguration?" I mean, everybody knows what's going to happen. It's that, but it's also just an excuse because I mean, look, the markets have been going crazy, right? We've had this big rally. It's a time to consolidate. It's time to take a break. Hence, what we have going on there in the squeeze. So I do anticipate that this will actually break out to the upside. Now, for the ECB, which is based on the euro, of course, we've got FXE, which is the ETF for the currency, for the euro currency. And so I'm not a huge fan of straddles, but I actually like doing them on the euro just because the implied volatility is so low. So we went out 9 days and in the room today, and we got the at the money at the time, the 103 half call and put 9 days out with the idea that, I mean, essentially this is saying if we can move more than $1.28 up or down, anything over that is kind of gravy, kind of profit on this trade. But what I've found in my experience and what I'm looking for is that, initially we get that kind of a reaction, like a gap up would be great. We sell the calls and then look for a roll back down. So obviously I don't know what's going to happen exactly, but the idea with this is that we're going to actually trade in a range greater than $1.28, not only potentially on tomorrow because of the meeting, but after that. So we give it 9 days to work with that. One other trade we continue to work in from the room is Alta. And, it's funny, I say live trading room, but a lot of the stuff we do that we text out and things like that are swing trades. And this is one we've been sitting on. It expires this week. We're starting to grind higher, but we're actually starting to run out of time on this. And you can see here that on Alta, while the trade has been working out okay, we've got back to an open P&L here. And we're getting close to our targets. We've only got 2 days left, and we really need to get out of this tomorrow. So if we can get a little bit more up price, we can exit this, and then we can do what's known as a roll and get some positions that are further out. I am looking for Alta to have a big move to the upside. Okay? Hope it helps, and you guys have a good night.